I'm going to be honest here. This video I'm making is a little bit out of frustration because I missed a great opportunity for my model, for my setup in today's price action. And we had really a good day in the market, but I missed my opportunity. I end up negative on the day. I'm reviewing all my price action and I realize I missed my trade. I want to show you my model so you got an idea of how I actually trade. So let's go ahead and take a look at the model. Right on the left side is the model 2022, and I also have the breaker. This is the bread and butter. This is the market maker buy model and market maker sell model. So market maker buy model is we start high, we come down, and then we end up going higher. Same thing. So these are both market maker buy models. Out of the market maker buy model, the setup is just slightly different, almost identical, but slightly different. That's why I trade two of them. Okay, for the model 2022, this is what you can expect. You got a low, a high, and a lower low that's made. It usually runs some type of liquidity, sell side liquidity. So this is a higher key level, and then it bounces from there and it moves higher. As soon as we break this level right here, we have a trade, we have a market structure shift. This is a market structure shift that tells me we potentially are changing direction. And this is very key when I'm looking for my model, when I'm looking for an entry. So once we break that, I then identify two things. I'm looking for this high, which obviously is the market structure shift, and I'm looking for a fair value gap in this leg. Just to clean this up a little bit, I'm looking for a fair value gap from this low to this high. I'm looking for a fair value gap for price to retrace into, and that is the model 22 ICT teaches, and I'll look for that re-entry on that fair value gap for a move higher. Now the difference between the model 22 and the breaker is just slightly different. That fair value gap may or may not be there. Many times it is, but if it is, it's overlapping with that market structure shift that we just talked about right here. And it also prevents it from going lower because you have the fair value gap here and the breaker overlapping. So I see the low, the high ideas being formed. We have a lower low. Okay, this idea really could happen. We ran some form of liquidity. We break higher. Okay, the trade idea is almost going to work. I'm waiting for retracement into this breaker, and as soon as we hit the breaker, I'm taking my entry for a long. This is the setup. This is what I'm looking for day in and day out. And when I identify it and we've hit the criteria, I'm making my entry. I'm seeing a much higher level of success by simply waiting for these things to happen. It didn't happen in today's price action, but it did. And this is where I became so frustrated because I didn't filter through my different time frames. I was watching the 1 minute, I was watching the 2 minute, I was looking at the 3 minute, and just nothing looked good. And I tried to force some things that were in the right direction, but because I just wasn't as confident, I got stopped out and I ended up at my max loss for the day, which is only $400 because I keep a really tight 10-point stop loss for every trade. And I hit that, so I'm done for the day. I'm reviewing my trades today at the end of the day, and boy, oh boy, did I see something that I was just like, I need to make this video so I can remind myself to look at this time frame. Look at different time frames, because what I'm going to show you, oh my gosh, the price action was so beautiful. It looked so pretty. Let me just show you here. We are in the NASDAQ. We're in the NASDAQ and we're March 15th. This is the 15 minute, 5 minute, 1 minute. Okay, I'm laying it all out for you here. On the 15 minute, we're looking at this price level, right? We're looking from this price action down. We hit this key level and we bounced. This is what I was looking at, and I'm like, oh, this is a big key level. We hit that key level right here on the 5 minute. We make a bounce, and then we go lower, and then we make this beautiful wick. This is gorgeous. I love this long-tailed wick, and especially when the next candle creates a balanced price range. Basically, this fair value gap is balanced by this fair value gap, a balanced price range. This is a recipe for an explosion higher. And we did just that. As you look on the 5-minute time frame, we just went higher up to the next key level that I was watching for right here. I wanted to see this hit, and that was going to be my target. Okay, let's go down now to the 1 minute. Now, this is the price action from the 5-minute to the 1 minute that I was looking at. Okay, I'm looking for, again, remember that low, high, lower, low. I'm looking for a fair value gap on the left-hand side and a fair value gap on the right-hand side for Model 22, fair value gap on both sides as well, but maybe lines up with the breaker. Let's look at this price action very closely. We make this low, we make this high, we make this lower low. Nothing really there. We're too close. It's above discount, so that's not attractive. I'm like, okay, the lowest one is right here. We have a low, high, equal highs. That's even better because I know equal highs tend to be attracted by price. So we have this low, high, lower, low, and then we break through it. This is the idea. The problem is there is no fair value gap right here. And I'm like, oh, this looks so good. This feels so good. It's a 5-minute where we bounced off this. I'm like, oh, this looks so good. So I'm like, okay, can I go into the 2-minute? I go into the 2-minute. There's no fair value gap here. And I'm not going to take this one here because it's a bunch of consolidation. I feel like I missed. Let's see, this is from right here. We're at 70. That's 30 points from here to here. I'm like, no, that's too high in the range for me to actually have an opportunity. I went to the 3-minute and there is nothing. I went to the 4-minute and there was one right here, but then we make our high here. It didn't look as nice. The 4-minute could have worked, but here's the higher high right here. There was no higher high in this leg as we go into the lower time frames. See here, right there. This is what I was looking for right here. This is those equal highs. Those equal highs were so attractive. Guys, here's the mistake I made. I did not look at a lower time frame. I was already on the 1 minute, but I didn't look at the 30-second. And guys, when I show you this 30-second time frame, you're gonna be blown away on how clear this is. And remember, I'm looking for this. I'm looking for this structure to show up in price action. And here it is. Let's go to the 30-second. We have this level here. This was the key level. We make that. We make a low, high. Those are the equal highs, and we make that lower low here. We break higher, and what do? We break those equal highs right there. Now, if I just draw that over, there it is. We break that, and we come into this fair value gap right within the breaker. So here's the fair value gap. Nice. But look at this. Also, we have a nice breaker. This breaker is the highest closed green candle. That is our breaker. That also overlaps there. So we have multiple confluences that are overlapping here that did not show up on the 1 minute, 2, 3, 4, or 5 minute. And guys, this was the perfect entry. And as you can see, we just, from this point on, let's just do a candle here. From this point, from this entry right here to my target, that was 84 handles. That would have been an amazing move. Yes, you would have had to wait 71 bars or 35 minutes, but this was the move that I missed because I didn't filter through all the different time frames. So the lesson here is when you're looking at a higher time frame, you look at the higher time frame for confirmation that yes, we are going higher. 5 minute, we hit a level, we created balanced price range, now we're moving higher. Okay, now that we made that balanced price range, let's go down to a lower time frame and let's identify it. If you're not seeing this right here, I'm like, oh, this looks so good, but it's not there. You need to go to another time frame to see if the different time frame will support the premise that you think price is going higher. To support that model 2022, that breaker, it was all right here, and you just have to find the right time frame to build that confidence, to make that entry, and to see it hit your target. So guys, if you like content like this where I'm just reviewing, please like and subscribe. Really, this was from me so I can solidify never to make this mistake again. Thanks for watching, guys. We'll see you in the next video. Take care.